I'm going to start off with the dollar today. We've got what appears to be a false breakdown here. We knew this was a possibility. I've gone over this before. Many um, major turns, like intermediate degree turns, both top and bottom, can occur like this. When a turn is coming, smart money will break through a resistance zone or a breakout on the top, or create a breakdown on the bottom that allows them to enter positions as everyone's stops are getting triggered, or sell positions as everyone buys the breakout. It looks like that's what's happening here on the dollar today. We got a breakdown below this support level here. We had three reversals off of this. Let's call it 92.5 on the dollar index. Broke down below that yesterday, and then we're reversing today. So this definitely looks like a false breakdown. The next confirmation we're going to see, and I would really like to see follow through tomorrow, would be to get above this 10-day moving average and then break this daily cycle trend line. If that or when that occurs, then at that point I'll be prepared to call a final daily cycle low, and I'm pretty sure this is going to be an intermediate cycle low as well. And if the dollar's bottom, then this is an opportunity for risk assets to correct. I feel pretty good that gold is going to correct. I'm not really, I wouldn't bet any money on the stock market. The Federal Reserve Plunge Protection Team could possibly keep this thing propped up even longer, but it's an opening anyway for the stock market to correct. We're very, very late in this daily cycle. And especially in the NASDAQ, we're just stretched an obscene amount of distance above the long-term moving averages. Here's a little bit longer term view of the NASDAQ, and you can see what happened when we got stretched too far above it back here in February. Triggered this major crash, and I would go so far as to say it's even more extreme now. So and I just can't see the market, not natural anyway, staying levitated into the election. Just too much uncertainty, especially if we get the mail-in voting. Who knows how long that's going to take to count the votes. It could be December or January before we know who the president is, and I just don't see the market, holding all-time highs into the election. So it seems to me that uncertainty as we approach the elections, more likely that we get our ICL decline as we head into the election, and then get a rally as we come out, as we know the result one way or another. All right, so moving on to gold. Just to start with, the move back above the 10-day moving average was not able to hold, and we've sold off. We're back below it again today, and we closed the day almost at the exact bottom. So this continues to look like a bear flag consolidation pattern to me, and maybe it's ready to break down. If you look at the RSI here, it's showing characteristics that are typical of the declining phase of an intermediate cycle. You can see it was not able to hold the overbought condition during this bounce, and it's now sold off and threatening to move into oversold levels again. If we get some follow through tomorrow, then this could get deeply oversold or start to embed in the oversold position. We've got some risk right here at about 1923. That's the baby bull. I'm sorry, that's the all-time highs, and the fact that gold could not hold the recovery above 2000, that probably triggered a bunch more stops, and that's probably why we've got such a large sell-off today. Anybody that bought above 2000 expecting that this recovery was going to hold and then we were going to the moon, they were disappointed today when 2000 didn't hold and it was immediately given back. And again, we're just going to have a lot of stops below this 1923 level, and any open below that is likely to trigger all those stops and give us another sharp move down. So, more warning signs that we've probably started the declining phase of the intermediate cycle. Now, what I want to try and determine now is whether or not this we topped on day 4 of a new daily cycle, and this is day 5, and we're starting the declining phase of what should be a left translated cycle, or whether we should just count this as a B wave bounce and an ongoing daily cycle low that may still come down and test this 1800 level and bounce. And this is a bit confusing. I don't know how to call this today. I guess I want to see some more evidence. If we get another big move down tomorrow, if we were to open below 1923, and just get a big waterfall type event, then at that point I would say this is more likely a continuation of a daily cycle decline that just didn't finish the sell-off right here, and we're working on a C wave down to break this daily cycle trend line here. Maybe I'll know tomorrow if we get another big whoosh down and we break below this, and specific definitely if we close below this tomorrow. At that point I would be inclined to say we're still working on this daily cycle here, and we're in the process of finishing the daily cycle low, and if I can make that call, then I might be willing to play a counter trend long side trade off of this support zone here at about 1800 for something more than just 4 days. I think at that point you could get a 5 to 10 day counter trend rally that would be tradable, and then you could get back on the sidelines expecting the daily cycle to left translate and move down and complete the intermediate cycle low, probably at this point, probably early to mid-October before the ICL is complete. But I'm going to need to see some evidence tomorrow, and specifically I want to see another big down day. I want to see some follow through on the dollar, some strong follow through, higher on the dollar, definitely a close above the 10-day moving average on the dollar, and a violent move down in gold, specifically one that breaks and closes below this trend line. And if those conditions are met, then I would be inclined to say that we're still working on the daily cycle low of this daily cycle here, rather than this being a new daily cycle that topped on day 4. And then in that case, then we'll look for a setup to get into some kind of counter trend trade when I think the next daily cycle low is complete. So a lot's going to depend on what happens tomorrow, and then how the rest of the week closes. Right now, the weekly charts are still bearish. Let me convert to those. All right, so this is gold, and this is setting up to, if we get follow through tomorrow and into the end of the week, then it's setting up to erase this partial reversal. And if that happens, then that's going to be a very, very convincing sign that we did get an intermediate top here. And kind of similar in the minors, although last week was not a very good reversal in the minors. So this week, I think I'm going to be watching this 10-week moving average, and if GDX closes below that by Friday, I think I'm going to make the call that this was an intermediate top. So the rest of the week should give us confirmation as to whether or not the metals have topped, and then at that point, we just bide our time and wait for maybe a short-term trade out of a daily cycle low if we can get the right setup. Otherwise, we'll just bide our time and wait for October, when the next intermediate cycle low would be due. And like I said, I will do another webinar on potential ways to use leverage out of that intermediate cycle low, and probably end of September, first week of October is when I'll be looking to do that. I want to get deeper into this. I want some confirmation that we are starting the intermediate cycle low, and then once we're getting late into that ICL, then I'll pick a day and we'll do another webinar at that point. So let's see how tomorrow plays out and the rest of the week, and at that point I think we'll have our confirmation on whether or not we are indeed in the declining phase of the intermediate cycle.